As soon as we seem to get close to the 200-day exponential moving average at the 3,149 mark, the market then seems to fall back. Are you taking this as a sign that we're going to see pretty flat performance until the year end?
My expectations are we are going to see flat performance up to around, say, middle of next year, towards the end of next year. The big reason is that the local investor is still shying away from the market. They're still not very confident about what's going to happen. The foreign investor is still pushing the market, is still the one who's running the market at the moment, and they don't have the sort of volumes that it takes to sort of have significant effect on the indexes.
Just taking a look at some of the major movers on the loser board. First of all, Everready fell back 4% after being the top gainer on Monday. To what extent has the news that the company is set to face competition moving forward from a new entrant, Uru Power, taken effect here?
Well, I don't think that should take effect in the short run, in that the new entrant has yet to actually put up their structure in the country and start manufacturing. So I don't expect that that is really as a result of the new entrant. I think Everready has just been moving due to the speculative nature of the Kenyan investor, and so we do expect it to continue to fluctuate like that. We've seen it stay pretty low over the last few years, and except for the once in a while where it jumps up a little. But basically, Everready still faces stiff competition from cheap Chinese products, and that is, I think, where their main problem is. They've been diversifying their products, and hopefully that will help them as their bottom line as we go forward.
Of course, as you say, it's a company that has been under significant pressure. We've seen it slash its payroll early this year due to escalating production costs, pretty much in the same boat as many manufacturers in Kenya, one would assume. What's your view on the manufacturing sector at the moment, Samuel? Because there seems to be contradictory information floating about how bad things really are for Kenyan manufacturers.
Well, I think, for example, infrastructure-wise, the government has been doing very well in terms of roads and the transport system, as well as trying to get electricity. But the problem is we are having a drought, and since we rely on hydroelectricity, the manufacturing sector has really suffered in that they have to go through things like rationing, which really cuts down into their ability to be efficient. And also the fact that that means that energy is quite expensive in Kenya. On the other hand, you find that banks are not really lending on the long term, which also hurts them. And I think the fact that we are beginning to see a deepening bond market would probably be the way to go in trying to raise the sort of funds that the manufacturing sector would need for long-term funding, which they need to be able to shore up their productivity.
Well, I was speaking to the chairman of the Kenyan Manufacturers Association during Power Lunch yesterday, and he certainly seemed positive. On the other hand, there's been a call from some quarters of the economy to actually look to government in introducing stimulus packages. I was reading an article saying that the Kenyan firms need help from government to jumpstart their operations, which is more severe in the manufacturing sector, where growth has grounded to a near halt. I mean, do you see anything coming to the fore in that regard in terms of stimulus packages from the Kenyan government, which is already under pressure when you look at budgets?
Well, the government has various ways that it can try to stimulate this sector. And I think the fact that they are actually really working hard on the infrastructure front is one of the sides which will really help manufacturing. Well, I do think that the finance ministry should look for ways of trying to help them. But I think at the end of the day, it is access to funds that is a big problem to the manufacturers. And so I think the fact that we see high lending rates and short-term lending from banks is also really hurting the manufacturing sector, in that they do need to get the sort of of funds that will help them to spark growth. So I believe that the banking sector should also be taking a forefront in trying to help them.
Very, very quickly, Samuel, I mean, Citi Trust gained 8.25% yesterday. It's not a player we usually see on the gainer board. Run us through the company's merit at the moment, because it's not a company that we speak about very often.
Well, Citi Trust has a very, very small ownership or shareholder base. And so a small deal normally really inflates their prices. I think you noticed some time back when it went from, about 300, 400 shillings, shot up by about 300, 400 shillings. So I think there's normally, whenever a small trade happens on Citi Trust, that happens, but it's nothing significant in terms of the market, in that the company has a very, very tiny shareholder base.